Good
Okay.
morning, sir.
Hi Bala, how are you? So let us start with today's topic. So today we are going to discuss residential status. So let us revise those concepts with the questions. So this is from your study material, page number 2.7. If you have the study
Yes, sir.
material, hi Bala, how are you? If you have the study material, you can open it. Otherwise, you can just look at the screen. Few questions which would be easy, we will do it orally, and some of the questions will be doing the writing practice as well. Okay. So this is Mr. Anand. He's an Indian citizen and a member of a crew of a Singapore bound Indian ship. See, first of all, he's an Indian citizen and he is the crew member of Indian ship. He's a crew member of an Indian ship. What does this word mean? Singapore bound. Singapore bound means that this ship goes from India to Singapore and then it comes back. So it is not a Singapore ship, but it travels from India to Singapore. So it is called Singapore bound Indian ship. Engaged in the carriage of passengers in international traffic departing from Chennai port on 6 June 2024. So this guy is an Indian citizen, crew member of an Indian ship, and he departed from Chennai port on 6 June 2024. From the following details for the previous year 24-25, determine the residential status of Anand for assessment year 25-26. So we need to determine his residential status, assuming that his stay in India in the last 4 previous years is 400 days. Okay. Now we know that a person becomes a resident, an individual specifically becomes a resident if he satisfies any one of the basic conditions. So if you remember that how we determine the residential status of an individual, so first we see the basic conditions, that whether any one of the basic conditions is satisfied or not. So first basic condition is that if the individual is in India for at least 182 days in the previous year or not. So if he is at least in India for at least 182 days, then we make him a resident. If he does not satisfy the first condition, we have the second condition also. At least 60 days in the previous year, and in the last 4 years, it should be 365 days or more. Right? So anyone, we need just anyone to be satisfied, and we will make this person a resident. Usha, yes, CMS to inter students can also watch this video. No problem at all. It is equally relevant for you as well. Okay. Now, so any one condition should be satisfied to become a resident. But we understand for some, there are certain exceptions. If a person is falling under those cases, we don't see the second condition, we only see 182 days condition. And one of the exception is if a person is an Indian citizen, if a person is an Indian citizen, crew member of an Indian ship, crew member of an Indian ship. So in that case, we don't see the second condition, we see only 182 days condition. Correct. So in this case, in this question, we can see that this person is an Indian citizen, crew member of an Indian ship. So here he will become a resident if he is here in India for 182 days or more. So let's see that how many days he was in India. So for crew member also, there is a certificate which is maintained by the authorities of ship. Mostly captain of the ship maintains that certificate. That is called continuous discharge certificate. That is called continuous discharge certificate. And the dates which are entered in the certificate, we exclude them. We actually presume that this person is not in India during those days. So whenever this continuous discharge certificate is made on that day, we assume that this person is not in India. So it is written over here. The date entered in the continuous discharge certificate in respect of joining the ship by Anand is 6 June 2024. So this is the date, this is the starting date of the continuous discharge certificate. So 6 June 2024, from this date onwards, we'll assume that he is not in India. So 6th June we will not include, we will include till 5th June only. Everybody okay with it? And the second is date entered in the continuous discharge certificate in respect of signing off. Signing off means that his journey is getting ended on this date. Which date? On 9th December 24. So whenever this continuous discharge certificate is given to you, the dates which are mentioned, the starting date and the end date, and the days in between should be excluded. It is assumed that he is not in India. So from 6 June onwards till 9th June onwards, he is not in India. So till when he was in India, till 5th of June. And from here, from 10th December onwards, he was in India. Everybody's okay? So we need to determine his residential status. Now, everybody, how we will be writing it in our examination. This is illustration number 1 in the study material. Lakshmi, is my audio clear now? Give me a moment. Guys, is my audio clear to you, Arup, Bharini, Sugandha, Smriti?
Sir, your voice is clear.
Voice is clear. Okay. There is some issue with the YouTube. Just give me a moment, guys. Lakshmi, please let me know if it is clear now. Okay. Now, how we'll be writing it in the examination? So, what we need to see, what is asked from us, we are required to determine his residential status. Nothing else. We just need to require to determine his residential status. Solution number one. Okay, thanks, Lakshmi. Now, Dev, good morning. Determination of. You will not write computation. We are not computing anything. We are determining the residential status. So you should write determination of residential status of Mr. Anand. This is for assessment year 25-26 we are determining. That is previous year 24-25. So first you should write the provision. So in this type of questions, first you should write the provision. First provision, then the facts of the question, and then the conclusion. This should be your complete answer. So first you should write the provision. What is the provision of the law? If you even don't remember the section number, and residential status section number is not at all important to learn, so you can skip them easily. So first write the provision in your normal simple language, reasonably correct. Then the facts of the question, what is given in the question, and then your conclusion. This is how your answer will be complete. So let us write the provision here. See, if the now it depends that for how many marks this question is. Let's say this question is of 4 marks or 5 marks. Then you should, at least if it is for at least 4 marks, then you should write complete provisions, facts of the question, and the conclusion. But let's say, for example, this question just carries 2 marks. So you can't spend that much time over there. So in that case, you can skip the provision portion. You can write the facts and the conclusion itself. So if in case if this question is just for 2 marks. Okay. Now let me assume that an individual is said to be resident during previous year if he satisfies any one of the basic conditions. First basic condition, write in short, right? Stay in India during previous year for at least 182 days, or B, stay for at least 60 days in previous year and 365 days or more in last 4 previous years. So you have written the provision. But one more thing we have to write, because since this question is specifically for Indian citizen who's a true member of the Indian ship, so we have to write note if. So we don't have to write all the exceptions that this is an Indian citizen who comes to visit India, or person of Indian origin, he comes to visit India, or an Indian citizen who went abroad for employment. No, we don't have to write all the 3 exceptions over here. We don't have that much time also. We should stick to that provision which is purely relevant to this particular question. So in that case, if, so we'll be writing only that exception. If a true member, if an Indian citizen being a crew member of Indian ship If an Indian citizen being a crew member of Indian ship, only first condition of 182 days is applicable. So now you have mentioned the provision that in this case only 182 days condition is applicable. Now provision is done. Now write the facts of the question, that for how many days this person was in India. Here Mr. Anand is an Indian citizen and crew member of Indian ship. His stay in India in previous year 24-25. Now we have to write his stay, that how many days he was here in India. So we know that he, in his continuous discharge certificate, it is mentioned that the starting date is 6 June 2024. So nothing else is mentioned. So we'll assume that he was here in India in April, May, and some days of June. Till when? Till 5th of June. So he was in India in April, plus May, June, for some days of June. Then he came back on 9th of December. 9th of December will not include. Then from December onwards will include. So December to March he was here. He was in December to March. So how many days he was here? In April 24, April has 30 days, May has 31. June, for June, how many days we have to take? Only till 5th of June. 5 days. Then he came back in December. So December, we will actually count from 10th December onwards. 9th December, we will not count. So December has 31 days. And initial 9 days, he was not here. So initial 9 days, he was not here. So he was here in December for 22 days. So December, he was for 22. Then January 31. February 2025. February 2025 is not a leap year. So 28 days. And March is 31 days. Can you please tell me how much is the total?
178.
178, sir.
It's 178 days. It's 178 days. So we have to write since some YouTube students are facing some issues with the voice. Okay. Since his stay is less than 182 days, therefore, Mr. Anand is a non-resident in previous year 24-25, because we have already mentioned that he has to satisfy only 182 days condition, and now we are writing the conclusion that his stay is less than 182 days, so he will become a non-resident in previous year 24-25. So this condition we don't have to see. This condition is not satisfied. None of the condition is getting satisfied, so he's a non-resident. Everybody's okay with it now?
Yes, sir.
Okay. Let us come to the second question. Okay. Illustration number 2 says that Brett Lee, an Australian cricket player, he's an Australian cricket player, okay, visits India for 100 days in every financial year. This has been his practice for the last 10 financial years. So since last 10 years, he's coming to India for every 100 days every year. Find out his residential status for the assessment year 25-26. There is second part also, there is third part also. So in this case, we need to find out his residential status. So I will not be writing this question as full, but just we'll be writing the facts over here. So although it depends that for how many marks it is. So let's say it is for 4 or 5 marks. So you should write the provision also, but right now, since we know the provision, now, please tell me, he's an Australian cricket player. So he's not an Indian citizen. Please tell me, should we see only 182 days condition, or should we see the second condition of 60 days plus 365 days also? Is only one condition is applicable, or both the conditions are applicable? Here, both the conditions are applicable. Because 60 days condition is not applicable only in 3 cases. What are the 3 cases? If you are an Indian citizen who went abroad for employment. So he's not an Indian citizen, he's not going outside for employment. Second, correct. If a person is a crew member of an Indian citizen, so we have seen he's not that. Third is if you are an Indian citizen or a person of Indian origin who comes to visit India. So he's not an Indian citizen, neither a person of Indian origin. So all these 3 exceptions are not there. So in this case, we can see both the conditions. So obviously he is not here in 182 days. How many days he's here? 60 days he's here. So 60 days at least he was here. Yes. 100 days he was here. And in last 4 years, was he here for 365 days? The answer is yes. In fact, from the last 10 years, he's coming regularly for 100 days. So he was here in the last 4 years for 400 days. So my first condition of 182 days is not satisfied, but the second condition of 60 plus 365 days is getting satisfied. So what he will be? He will become a resident. Agree that one of the basic condition is satisfied. He will become a resident. Now, since he becomes a resident, so should we stop over here, or we should now correct? Now we need to identify that whether he is an ordinary resident or a not ordinary resident, right? So let us do this question also. Illustration number 2. It says, today there is some issue with the YouTube students. They are finding, just give me a moment guys, let me see if I can rectify it. Give me a moment. In the meantime, guys, you keep on doing yourself. Let me rectify what is the problem with the YouTube students they are facing. Okay. So in this case, so stay in India. So I'm directly writing the facts. Stay in India in previous year 24-25 is 100 days. Stay in last 4 years is 100 days into 400 days. So since the second condition is satisfied, since stay in previous year 24-25 is 60 days or more, and 365 days or more in last 4 years, therefore Mr. Bretley is a resident in previous year 24-25. So we should not stop over here. So this person is a resident. Now we need to determine that whether he is a ordinary or not ordinary. So for that we have additional conditions. Additional
Days in
conditions
India,
is correct.
730 days in 7 years.
Correct. So there are two additional conditions which needs to be satisfied, and both of them should be satisfied. So both of them should be satisfied. And what are those? So I'm writing in short. First is that at least in 2 out of last 10 previous years. So both of them should be satisfied. And if both of them should be satisfied, we'll call him ordinary resident, but ordinary resident. But if any one of them is not satisfied, so he would be a resident, but not ordinary resident. So let us see. First one is easy, that whether in the last 7 years he was here in India. The answer is yes. In fact, he was coming for the last 10 years, but every year he was coming for 100 days. So in this case, I'm again writing in short that in last 7 years, he was here 100 days for every year into 7. That is 700 days. So he was here in 700 days. So he is not satisfying the condition of 730. So first condition is not satisfied. Should I check the second also now? No. There is no requirement to check the second because I need both of them to be satisfied. Both of them together should be satisfied. But if any one of it is not satisfied, so it means that he is not an ordinary resident. So now we can write directly the conclusion that since his stay in last 7 years is less than 730 days, therefore he will become resident. But what kind of resident? Resident, but
Not ordinary.
not ordinary resident. In previous year, you have to write that because every year our residential status can change. So you should write in previous year 24-25. Himayu, Veera, Lakshmi, can you tell me, is it better or not now? Done. Now let us come. Correct, resident but not ordinary resident. Now let us come to the second part of this question. They were asking us that would your answer change if the above facts relate to Srinath, an Indian citizen? See, in this question we have answered as if this is Bretley, an Australian citizen. But now they are saying, would your answer change if the above facts relate to Srinath, an Indian citizen who resides in Australia and represents the Australian cricket team? Okay, so generally he is residing outside India. Please tell me. Okay, is it fine now? Good. Thanks, Veera, Hari, Lakshmi. Okay. Now please tell me, your answer will change if this person is an Indian citizen who is generally staying outside. So he stays in Australia and now he's coming to India every year for 100 days. Please tell me what change would be in the basic conditions. Now we have already discussed that the basic conditions says that you should be here in India for 182 days, and second condition is 60 days plus 365. But 360 and 365 has certain exceptions we have already discussed. And one of the exception is that if you are an Indian citizen or person of Indian origin, you all know what is a person of Indian origin, whose parents or grandparents, any one of them, are born in undivided India. Okay. So if a person is an Indian citizen or person of Indian origin and he is coming to visit India, then in that case, we also don't see the second condition. We only see 182 days in the previous year. So do you think that this person is falling under that exception? Yes or no? Everybody tell me. Do you think that he is falling under that exception? Arub, Smriti, Ritvika?
Yes, sir.
Yes, because he is an Indian citizen. He is an Indian citizen and he is generally staying outside India in Australia, and now he's coming to visit India every year. So he's falling under that exception. So we can't see 60 days condition over here. We only need 182 days conditions to be satisfied. And since he is not satisfying 182 days condition, in this previous year, how much days he was here? Just 100 days. So in that case, he will become a non-resident. He will become a non-resident. So let us write this also. B point. So this was A. This was A. B point. So I'm writing in short, in case of Indian citizen. In case of Indian citizen who is visiting India. He is visiting India. So only I can write such person becomes resident if the stay in India during previous year is 182 days or more. Only this condition we need. Only if the stay in India is 182 days or more. Since the stay of Srinath is 100 days in previous year 24-25, therefore he will be non-resident in previous year 24-25. So in this case, he would be a non-resident in this previous year. Done? Guys, are you done with this?
1 minute, sir.
Okay. Let me know once done.
Done, sir.
Okay. Now, the third portion says, what would be your answer if Srinath has visited India for 120 days instead of 100 days every year, including previous year 24-25? So will our answer change? Now, why they have given us 120 days? Because we understand that there are some special provision also. But that special provision we can only apply if their Indian income is given to us. So here there is no information regarding the Indian income. There is no information regarding the Indian income. Because we know that if your Indian source income is more than 15 lakh rupees, then we apply the special provision. We don't apply the normal provision. Then in that case, we apply the special provision. And we see that if you are 120 days or more in the previous year, in the last 4 years, you are 365 days or more, even in that case, you become the resident. But in this case, there is no information regarding the income of the assessee. So we can't apply special provision. Although in this solution, they have taken both the cases, that if his Indian income is more than 15 lakh or if his Indian income is less than 15 lakh. But in your examination, you can simply write, since there is no information regarding his income of the assessee, so we have to apply the normal provisions only. Correct. So even for 120 days, it will not be applicable because we require, the normal provision says that we require 182 days at least. Correct. So in this case also, he would be a non-resident. So how we will be writing it over here? Although if you will see in your solution, this solution has actually taken two cases. Let's say his income, his total income excluding foreign sources. What is excluding foreign sources? Indian source income. So if it would have been exceeding 15 lakh, then what would be your answer? If it is not excluding 15 lakh, what would be the answer? But in your examination, guys, Indian income information is not available. Please apply normal provisions only because you don't have time to write all the cases. So in this case, what you will write? C point. C point. In this question, there is no information regarding the Indian source income. There is no provision regarding the Indian source income. Therefore, special provisions will not apply. Therefore, special provisions will not apply. The assessee would be resident if stay is at least 182 days in previous year 24-25. So only 182 days condition will be seen over here. Since the stay is, what they are saying, the stay is only 120 days. Since the stay is only 120 days in previous year 24-25, therefore Srinath will be non-resident. Non-resident in previous year 24-25. So here also he would be non-resident because we will take only one of the case because here the income information is not mentioned. So we can't apply the special provisions here. In case, so now Lakshmi is asking me, sir, if the income details are given. If the income details are given, then yes, then you have to apply that 120 days conditions. So what was that 120 days condition? If his income, total income, excluding the foreign source. What is excluding the foreign source means? The Indian source income. What is Indian source income? Tell me. Guys, what is the Indian source income? Please write it somewhere if you don't remember it right now. What is Indian source income? Indian source income. Guys, actually you should write, not in this language, Indian source income. You should write other than foreign source income. Right? Indian source income is nothing but other than foreign source income. Other than foreign source income. You should write in this language. So other than foreign source is equal to Indian source only. So if this income is actually more than rupees 15 lakh, if this would have been more than 15 lakh, then you should apply that 120 days condition. And what was the Indian source income? What is the Indian source income? Comprises of three things. Any income which arise in India.
Received in India.
Correct.
Due to be arrived in India.
Received in India. Arise in India, deemed to arise in India. Same here.
Controlled in India.
Received in India.
Control.
And which is neither arising in India nor received in India, but controlled from India. Controlled from India. So these are the three things. These are the three incomes which are Indian source income, or we can say other than foreign source income. So in that case, actually you have to see that if all the three club together, that is the other than Indians, other than foreign source, Indian source, it is more than 15 lakh, then you should go with the special provisions only. Then you should not go with the normal provisions. So if the Lakshmi, to answer, if the income details are mentioned over here, then we can apply that 120 days condition. Then we have to apply that 120 days condition. Actually, this person will go only in special provision in that case. Everyone is okay with it?
Yes, sir.
Okay. Okay. First of all, this is illustration number 4. It says the business of HUF is transacted from Australia. So there is an HUF and their entire business is transacted from Australia, and all the policy decisions are taken there. All the policy decisions are taken there. Mr. E, the Karta of HUF for 15 years. So after 15 years, he's coming to India. He come to India on 1/4/2024 and leaves for Australia on 1/12/2024. Determine the residential status of Mr. E and HUF. Guys, for Mr. E, I think it is easy. You can easily determine. So for Mr. E, so I'm not writing it, but I think for Mr. E, so first of all, this person is actually, he is visiting India and he's an Indian citizen because he was born in Kolkata. So this Indian citizen, he is coming to visit India. He's coming to visit India. Please tell me. And there is no information regarding the income details. There is no information regarding the income details. We will apply the normal provisions. First of all, tell me, forget about HUF right now. Just tell me about the Karta. We have normal provisions only. 182 days condition and 60 plus 365. Please tell me whether both the conditions can be taken into consideration or only first condition we should take.
Only first condition.
Why, Abhirami, you are not taking the second condition?
Because he is visiting India.
Correct. He is an Indian citizen and he's an Indian citizen or person of Indian origin. Here is an Indian citizen and he's coming to visit India. So he's coming to visit India. So in this case, the second condition would not be applicable. Only 182 days conditions would be applicable. So if 182 days condition is applicable and if he's satisfied, he will become resident. So let's see whether he is satisfying it. I'm not doing it. Let us do it orally. So whether he's actually satisfying it, the answer is yes, because he's coming on 1st April 2024 and he's going back on 1st December 2024. So for how many days he was in India? April till November he was here, and even on December, 1 day I'll take. So from April till November plus 1 day of December, I'm presuming it is going more than 6 months, actually 182 days. So you can calculate it with the number of days and it is going more than 182 days. So they have actually calculated it also from April till December, but December only 1 day has to be taken. The day when we arrive and then the day when we leave India is also taken into as stay in India. So he is actually satisfying that 182 days condition. So he will become resident. Guys, how you should answer this question, your presentation should be actually reasonably good. So how you should actually, I'm not doing it, but I'm just telling you that when you will be writing the solution of this, so first your heading should be that it should be residential status. Don't write it, but status of Mr. E. So first of all, write everything about Mr. E. And once your answer is complete over here, then your heading, just leave 1 or 2 lines, just leave a gap over there, and then residential status of HUF, so that the examiner can clearly identify that up till which portion you are actually determining the residential status of individual and from where residential status of HUF is given. Correct? So this is how you should mention. Now for Mr. E, so he becomes resident. Why? Because he is here for at least 182 days. He becomes resident. Guys, now if a person becomes resident, individual becomes resident, then we need to identify whether he is ordinary or not ordinary. For that, we need additional condition. First additional condition is 730 days in the last 7 years. Guys, it was written that he came to India after 15 years. So in this year he came, and before 15 years he was there in India, but in this last 15 years he was not here. So what do you think that in the last 7 years, whether he is satisfying 730 days condition? The answer is no. Correct? 730 days condition is not satisfied. I will not even check the second condition that he should be resident in 2 out of last 10 years, because I need both the conditions to be satisfied to make him ordinary. So what do you think, that he will become ordinary or he will become not ordinary?
Not ordinary.
Not ordinary.
He will become not ordinary because he is not satisfying at least 730 days in the last 7 years. So the answer would be he is a resident but not ordinary during this previous year. Now come to HUF. Now you are coming to HUF. So first write the provision of HUF. So what is the provision of HUF? Please tell me when HUF becomes resident or non-resident.
We will see the additional conditions of Karta.
No. First, just see the basic conditions. Na. So please tell me what is the first step. What is the first step?
There is any control in India.
So the first step is an HUF becomes a resident if the control or management is in India, even partially, even I can say 1%, but please don't write 1% over there in your exams. Just write that if the control and management is in India, either fully or partially, even partially, then this HUF will become resident. But now in this case, since the entire control and management is there, so they are saying that all the policy decisions are taken there. So HUF will become non-resident. So they will become non-resident, correct? So if they will become non-resident, would you like to see whether ordinary or not ordinary? No. So once a person becomes non-resident, then we don't check ordinary or not ordinary. Well, our answer will stop over there. So this HUF will, in this case, will become non-resident in this previous year because his entire control and decisions are taken from outside India. Okay, please tell me in case, let's say in case, if even some of the policy decisions are taken in India, then this HUF will become resident. Okay. Now if HUF will become resident, now tell me how you will determine for the HUF that whether it is ordinary or not ordinary. Tell me guys.
We will see the additional conditions for Karta.
Now, correct. Now, please apply the additional conditions on Karta. So, for HUF, actually, first we will see to make resident or non-resident. First, we see where the control and management is. If even 1% control and management is in India, then that HUF would be resident. And once it becomes a resident, check ordinary or not ordinary. To check this, apply additional conditions on Karta. Just apply additional conditions on Karta. And if Karta is satisfying both the additional conditions, then this HUF will become resident and ordinary. If the Karta is not satisfying the additional condition, even one of the additional condition is not satisfying, then this HUF will become resident but not ordinary. So please don't get confused because some students make this mistake. Sir, what is the residential status of Karta? It will become residential status for HUF. No. See, first for HUF, just see control and management. And after that, just apply additional conditions on Karta, right? Additional conditions on Karta. This is how you have to see it. Okay, so I think that this is the question which you can easily do. Let me do one of the question for scope of income today. Fifth question is quite a small question. Sixth is also small. There is one big question which I would like to take. Okay, this one. Let us come to this one. Compute the total income in the hands of individual. Lakshmi, Veera, Hari, is my voice clear now? Compute the total income in the hands of individual, age 35 years. So he is 35 years of age. Being a resident and ordinary resident. Resident but not ordinary resident and non-resident. So what are they saying? That we need to compute the total income. We need to compute the total income. If this individual who is not a senior citizen is 35 years of age, and if he is an ordinary resident, if he is a not ordinary resident, and if he is a non-resident for assessment year 25-26, assuming that he has exercised the option of shifting out of the default tax regime. So he is following optional regime. He is not following 115 BAC. He has shifted out from it. So we need to compute his total income, assuming if he is ordinary, not ordinary, or non-resident. And we have been given some of the incomes. So let us quickly do this question. Little bigger, but I think that most of the concepts would be covered over here. So let us start with this question. This is illustration number 8. This is page number 2.31 of your study material. Okay, everybody with me. This is illustration number 8. Computation of total income. Thanks, Hari, Veera, Lakshmi, thanks. Computation of total income of name of the assessee is given. No. Computation of total income. This is assessment year 25-26. And there are certain income which is given to us. But we need to assume that if he is a ordinary, not ordinary, or a non-resident. So in case this person is a resident, an ordinary resident, a resident, not ordinary resident, and if this person is a non-resident. Okay. Now in this type of question, guys, you should always, if they are asking some that he would be resident, ordinary, not ordinary, or non-resident, you should make some columns. And when you will be writing the particulars, don't just copy and paste everything. You should write it in short, just 3 or 4 words, so that the examiner can understand that yes, you are picking up this particular point. So now let us start with the first income. So income on UK development bonds. UK means United Kingdom. So income on UK development bonds. Please tell me, these bonds are Indian bonds or these bonds are foreign bonds? These are foreign bonds.
Foreign bonds.
So this is not an Indian income. This is income which is arising outside in UK, British. And so this is actually, it's a foreign income. And you all know that for ordinary resident, global income is taxable. We understand for ordinary resident, only global income is taxable. We understand for non-resident, any income which arise in India or any income which is received in India can only be taxable. Even arise and receive is taxable for everybody. So for not ordinary resident also, resident but not ordinary, any income which arise or any income which receive in India, you don't have to write it in the examination, but this is what you should know. For ordinary resident, global income is taxable. For not ordinary resident, only income which is arising received in India, non-resident arising received. See, any income which is arising in India. So Indian government has power to tax it. Indian government has full authority to tax it. Any income which is arising in India. Any
Except for
income. Any
not
income.
ordinary resident. Controlled in India is also.
I'm coming to that point, Bala. Now, any income which is received in India, any income which is received in India, income which is received in India, Indian government has power. Indian government has power that they can tax it. So any income which is arising or receiving, everybody has to pay taxes. But any income which is not arising or not received in India, then these two people will not pay the taxes. But yes, for not ordinary, there is one more thing, control. Guys, this control is only for not ordinary resident. So any income which is not arising in India, not received in India, but which is controlled from India. Please remember this, controlled. If it is controlled from India, then also it is taxable for not ordinary. And here, if any income for non-resident, if any income is not arising, not received, even if it is controlled, guys, this control word is not relevant for non-resident. Please do remember, by this way, you will not make a mistake. Even any income which is controlled from India, no, he will not pay tax. He will pay tax, not non-resident will pay tax. Any income which is arising, any income which is received in India. This control word is only and only relevant for not ordinary resident. Correct? So control word will not hamper non-resident. For ordinary, it's very simple. Global income is taxable. So with this information, let us start with this question. See, if I read only up till here. Interest on UK development bonds. Interest on UK development bonds, if the question would have been stopped over here, then this income is not arising in India. And if nothing is mentioned, I will assume. So will I assume that income is received in India? No. If it's a foreign income, so it would have been received in foreign country only. It is not received in India also. So in that case, it is a foreign income. So foreign income is not taxable here, is not taxable here, and is taxable over here because global income is taxable. But here they are saying that 50% of the interest received in India, 50% of the interest is received in India. So please tell me, out of this, 50% is received in India. So received in India is taxable for everybody. And for ordinary, global income is taxable. So please tell me how much you will make 10 out of 10,000. How much you will make over here? 10,000. And
5,000 for
here we will make or we will not make? We will make. But why? Because it is received in India. So 5,000 and 5,000, we will make it over here. So how will we be writing it? Simple. Income, UK bonds, 50% received in India. 10,000, 5,000, 5,000. Okay. Second, income from business in Chennai. So this business is in Chennai. Okay. Received does not matter. Please tell me this business is in Chennai. Where the income is arising?
India.
India. So even if it is received anywhere, even if it 100% received outside India, does not matter because this income is in Chennai business income, which is arising in India. So this is taxable for everybody. Any income which is arising in India, government will say, Indian government will say, it is our money. We have to tax this. So 20,000 rupees is taxable for everybody. So simple, Chennai business. Simple, guys. You just have to make the examiner understand that what type of income it is. So simple, Chennai business income. And it was 20,000 each. 20, 20, 20. Now the third one, short-term capital gain on sale of shares of an Indian company. Please tell me these are assets of Indian company. So we understand that on any assets which belongs to India, any assets might be any property in India, might be any shares of India, might be any debentures of India. So any income which arise, so it could be interest on debentures, it could be dividend on shares, even it could be capital gain on those interest or on those debentures or shares. So any income which is on Indian assets, that is an Indian income. It is arising in India. So received in London does not matter because these shares are Indian company shares. The 20,000 is again taxable for everybody because this is Indian company shares. So C, short-term capital gain on Indian shares. Simple. In your examination, guys, don't write the full sentences. You will waste your time. Simple, write in short so that just examiner can understand this. So this is Indian shares. So again, I believe it is 20,000. So this is 20,000, 20,000, 20,000. Everybody is okay with this? This income is arising in India. Now, dividend from British company. Dividend from British company. This is not an Indian shares. Received in London. 5,000. Please tell me, is this income arising in India? No. Is this income received in India? No. So neither arising nor received. And control is also not there, right? There is nothing is mentioned regarding control. So non-resident will not pay tax. Not ordinary will not pay tax. But our poor guy, that is an ordinary resident, his global income is taxable. So 5,000. Correct. So 5,000 00. So it would be 5,000 00. And what it is, this is what dividend now. This is dividend on British shares. Okay. E. Lakshmi, in second part, 50% received in India. Second part, C. Chennai business. See, wherever it is received, we don't care because it is arising in India. It's a Chennai business, na. So if you are doing business in India, everybody has to pay tax. Even a non-resident will come here in Chennai. He's doing business in India. What will Nirmala Sitharaman will say? Boss, you have to pay tax. He will say, sir, ma'am, everything is getting received outside India. It doesn't matter. That person is doing business in Chennai, so everything would be taxable. So received does not matter over there. Lakshmi, got it, na? E point. Long-term capital gain on sale of plant in Germany. Okay, there is a long-term capital gain sale of plant in Germany. It is not an Indian asset. So it is not an Indian income. 50% of the gain are received in India. Okay, now 50% is, it's not an Indian income. So it should be taxable. First of all, if I don't read this received in India, so it is not an Indian income. It is arising outside. So only for ordinary global income is taxable. For both the other people, they don't have to pay it. But if it is received in India, then we have to pay it. So 40 for the global income.
For our resident.
Correct. And
2020 for both.
Reason being because it is received in India. This is long-term capital gain on German asset, German plant. So it is not arising in India, but 50% is received in India. So therefore, we have made 40, 20, 20. F is done till here.
So
Yes, sir.
Yes.
Okay, good. Now, income earned from business in Germany. Again, a German business income, not here, which is controlled in Delhi. Forget about this receipt right now. Which is controlled in Delhi. Please tell me 70,000 you will make it taxable for whom?
ordinary resident and not ordinary resident.
Resident.
Ordinary global income is taxable, no doubt about it. For not ordinary, entire
Ordinary.
70,000 you will make it taxable. Why? Because it is controlled from India. Because for not ordinary, that control word is important. So 70,000 here and 70,000 here. No doubt about it. Why here? No problem. Global income. Why here? It is not arising in India, not received in India, but it is controlled from India. So for not ordinary, that control word is relevant. And for non-resident, it will not be taxable. It will not be taxable. Why? Even control from India does not matter. Control from India does not matter, so it will not be taxable. But if something is received in India, then only he will pay tax. Otherwise, he will not pay tax. Agree? So now, it is given to us that 40,000 is received in India. So now non-resident should not pay tax on it, but since it is getting received in India, it is not remitted, it is received. What is remitted? Remitted means that you have already received it and you are now transferring it into India. But it is not that case. It is directly received in India. So 40,000, you will make it taxable here as well. So it's a German business. German business. Controlled from India. And 40,000 received in India. Correct? Okay. Now, next is profit from a business in Delhi. Profit in a business in Delhi. Where is the business? Delhi business. It is managed entirely from London, does not matter. You are doing business in Delhi. You are managing it from anywhere, does not matter. See, Apple Store, if it is in Delhi, if it is in Mumbai, it is being managed from US, does not matter. You are doing business in India. So even if it is, so don't get confused over here. So if it is managed entirely from London, does not matter. This business is a Delhi business. So Delhi business, everybody has to pay tax because you are doing business in India. So 15,000 for everybody. So it's a Delhi business. Delhi business, 15,000, 15,000, 15,000. Everybody is okay with that?
Yes, sir.
Okay. H. Income from house property in London. Okay, this house property is from London. Okay, is it written rent from London property, or it is written income from house property income? It is written income from house property. It means that it is a computed income. When they write in, although they have mentioned it computed, guys, in case if they would not have mentioned it computed and they are using the word income from house property, it means that they have already computed. But if they would have written it like rent from London property, rent, so it means that it is just GAV or NAV, right? So in that case, you have to give at least 30% standard deduction 24A. So you have to see that whether rent is written or income from house property is written. So here income from house property is written. Although they have now safely they have mentioned computed also. Even if they would not have mentioned computed, I would assume that it is a computed income, right? So please see that whether it is rent is written over there or income from HP. So it is income from HP in London. So it is not an Indian income, first of all. Deposit in a bank at London. So it is deposit in the bank in London. It means that it is not received in India also. So this income is a London business income, sorry, London house property income, deposit there also, brought to India. Brought to India means it is received in India or it is remitted to India. It is remitted.
Remitted.
So remitted we don't
Remitted.
tax. Remission, whenever this amount is remitted to India, it is transferred to India. For transfer, we don't tax it. Right? If it is received, directly received, then only we can tax it. So in this case, this is not an Indian income, it's a London income, neither received in India. So 50,000 non-resident will not pay, not ordinary will not pay, but the global income for ordinary is taxable. So 50,000 only for this person. Okay. Guys, is it anywhere written that it is past year income, or what we will assume? It's a current year income, right? It is not written it over here that it is a past year income. Right. So we will assume that this income related to previous year 24-25 only. This is the current year income. Right. In case if they would have written it that this income relates to any past year, previous year 22, 23, 21, 22, any past year, then we can't tax past year income. So because this is the total income, our question is asking to compute the total income of this year. So if this would have been past year income, I would not tax for anybody. But here there is no information regarding that it relates to any past year. So we'll assume that it is a current year income only. So 50,000 should not be taxable for other people, but for the global resident over here, 50,000 here, and here it is 00. So this is house property in London. So this is house property income of London. 50,000 global income would be taxed over here. Had it been a past year income, I would have not text here also. It would have been 0 here as well. Lakshmi, manage entirely from London. Which one you are asking me? Manage entirely from London. See here, manage entirely from London does not matter. So that is what I was saying, that this profit from business in Delhi, only this much is relevant for us. Manage from anywhere does not matter. So if this is a Delhi based business, so you have to give tax. Everybody has to pay tax. So this income is directly arising in India. Any income which arises in India, everybody has to pay tax. Okay. Now let us come to the next one. Interest from debentures in an Indian company received in London. Please tell me, guys, these are which debentures? Indian company debentures arising in India. Everybody received anywhere does not matter. This income is arising in India. 12,000, everybody will pay tax. 12, 12, 12. This is Indian debentures. These are Indian debentures. Everybody's okay? Now, fees for technical services rendered in India. Technical services are rendered in India. Please tell me, where are these technical services used? Technical services are used in India. So if these technical services are used in India, this income is arising in India. Any royalty which is used in India, any fees for technical services which is used in India, so we will say, boss, we will going to tax it because we are using your technical services in India. So what does it mean? Let's say, for example, Reliance Mumbai. So Reliance Mumbai, let's say they have a factory somewhere and they need some technical services. And they ask a German guy, they ask a US guy, they ask an Australian guy that can you provide a technical services here in Mumbai, in our factory? So they say, okay. So they are providing technical services in India. So they have to pay taxes. Why? Because this income is arising in India. So technical services are rendered in India. This is purely arising in India. 8,000 rupees. Everybody has to pay tax. If you are a non-resident also, you are from Germany, doesn't matter. Because you are rendering your technical services here in India. 8,000, 8,000, 8,000. Technical services in India. Correct? Okay. Next is profit from business in Mumbai. Again, same thing. Business is in Mumbai. Everybody has to pay tax 26, 26, 26. Does not matter where it is getting managed, does not matter. This is a Mumbai business. It's a Mumbai business. Everybody has to pay tax. 26, 26, 26. Okay. Income from property situated in Nepal. So we have a property situated in Nepal, received there, computed. So it's a computed house property income. We don't have to give 30% standard deduction. It is 16,000 rupees. Please tell me, is this in? Yes, please. Tell me what you were saying.
Only resident.
Correct. So this income is neither arising in India, it's a Nepal property, and it is received there, or it's neither arising in India nor received in India. So only ordinary will pay global income and other people will not pay. 16. This is Nepal property income. Okay, everyone is okay with this? Next. Okay, everybody tell me, past foreign untaxed income brought to India during the previous year. This is past foreign untaxed income, 5,000 rupees. Please tell me what I should do about this.
Ignore.
So it would not be taxable for anybody. So global income is taxable for ordinary. I understand global income is taxable for ordinary, but it should relate to the current year. And because we are computing the total income of this year, I'm not calculating the total income of any other past year. So in this case, this 5,000 rupees, because it is past year income, sir, it is untaxed in the past year, doesn't matter. Please make it income of that year. We don't have to compute the income for that year. We are computing the income of this previous year. So this is not an income of this year. So this 5,000 is the past year income. Zero, zero, zero. Okay. Income from agriculture land in Nepal. Okay, this is an agriculture income. Please tell me whether agriculture income is exempt.
Indian agriculture income.
Very nice. Only Indian. Correct, Santosh, Lakshmi, correct. So only Indian agriculture income is exempt. The foreign agriculture income is taxable. Generally, it is taxable, right? So it is taxable for ordinary, obviously. So first of all, it is not an Indian income. This agriculture income is arising in Nepal. It is not arising in India. Received there. Received is also there. And then brought to India. Then it is remitted to India. So it is not arising. It is not received. So non-resident, not ordinary
Absolute
resident will not pay
resident.
tax. They will not pay tax. It is not arising, not it is received in India. Agriculture income from outside India is taxable, but we can't tax these two. Why? It is not arising, not received. Only for ordinary we have to pay tax. So 18,000 would be only here, because this is a taxable income. This is a taxable income, but only for ordinary resident. And these two people will not pay tax because it is neither arising in India nor received in India. So this is agriculture income from Nepal. Guys, if this would have been not Nepal, it would have been Nagpur, anywhere in India. Then what you would have done? Agriculture.
Resident also.
Then agriculture income from India is exempt, correct? So it would have been 000 for everybody, because agriculture income, any income which is exempt, so exempt means exempt for everyone. So exempt would be here 0, here 0, here 0. But it is Nepal, agriculture income can be taxable, but not in this case, not in this case, but only in this case. Okay. Few more. Income from profession in Kenya. It is not an Indian income, not arising in India. This profession is in Kenya, which was set up in India. What does it mean? Set up in India means controlled from India. Set up in India means same as controlled from India. Received there but spent in India. Okay. Guys, never get confused with spent in India. We don't care about spend in India. So we welcome that you earn from outside, you spend in India. Because whenever you spend in India, we'll have a foreign currency. So that's okay. So spend in India does not matter. So only what we need, arise in India or received in India. So if it is spent in India, that is purely will confuse you. So spend in India is not relevant for us. Okay. First of all, tell me, is this profession is in India? No, it is not an Indian income, not arising in India. And received where? Received in Kenya itself. So neither it is arising nor it is received. Neither it is arising nor it is received. Non-resident will not pay tax. Non-resident will not pay tax. It is not arising in India. It is arising in Kenya. Received in Kenya. Non-resident will not pay tax. Sir, it is controlled from India. Does not matter for non-resident. For non-resident, control does not matter. See, we have already discussed for non-resident, control does not matter. But for not ordinary, control matters. So control matters. So here it is. This is Kenya income. Non-resident will not pay tax. He will say, boss, I will not pay tax. This income is neither rising in India nor received in India. Control does not matter to me. But for global income for ordinary, we all know 5,000 will make it taxable. Tell me about not ordinary, will make it taxable because the control matters over here. So 5,000 will be here. Got it? Now, gift received on the occasion of his wedding, 20,000 rupees. What do you know about it? So we know a little bit about IFOS also. So please tell me, gift received on the occasion of wedding, 20,000 rupees.
Exempt.
Is it
If he receives, then it is exempt.
Okay. If this would have been 60,000 rupees, then
50,000, I think, is the
Sir,
reason.
for wedding occasion, we should exempt everything.
correct. For wedding, it would have been 60,000, it would have been 60 lakh, it would have been 60 crores, does not matter. Everything is exempt on wedding. So on wedding, whose wedding? Assessi's wedding. So on Assessi's wedding, everything is
Only
exempt.
one time.
So it is only for the wedding purpose, that on the occasion of the marriage of the assessee, not the marriage of son or marriage of daughter. No, the person for whom we are calculating the income, that person is getting married, right? So it is an exempt income under IFOS. So on any other occasion, if you receive, it would be taxable if this would have been more than 50,000 rupees. So then it would have been taxable. What amount would have been taxable? The entire. Let's say it is 55,000 on any other occasion, 55, entire 55 would have been taxable. If it would have been less than 50,000, then I would have made it exempt. Although we take it aggregate, but let us assume that this is the only gift which we have received. So less than 50,000, I would have exempted it. But this is a case of wedding, that is marriage. Or marriage, everything is exempt. Ritvika, got it? So everything would be exempt over here. So gift received on wedding, it is exempt for, exempt means exempt for everybody. Okay. Interest on saving bank deposit in State Bank of India, 12,000 rupees. Please tell me, where is this income arising? Because this bank is situated in India. So this is arising in India, 12,000 rupees, saving bank deposit. Interest on saving account, 12,000 for everybody, because this is an Indian income. arising in India. Received anywhere does not matter because it's an Indian income. You have a bank account in India. So this is an Indian income. Now please tell me, whenever there is a saving account, whenever you have to calculate just the GTI or you have to calculate the total income? Total income. What does total income means? That, sir, from GTI, we will deduct chapter 6A deductions. Chapter 6A deduction. Okay. And we have read in this question that which regime he was following. Was he following default regime or he has opted out?
Optional regime.
He is following optional regime. So chapter 6A deductions are also available to him. Mostly all the deductions can be available to him. So please tell me, whenever you will see this interest on saving account, which deduction you get in your mind? 80,
TTA.
TTA, and TTB also if the person is a senior citizen plus resident.
Up to 40,000.
TTB is also there if the person is a senior citizen plus resident. This person is not a senior citizen. I believe the age was 35 years. So TTA would be available to them if there is a saving account, interest, saving bank account, cooperative bank or post office saving account. Now in that case, TTA. Please tell me, TTA is applicable. I know that you might be forgetting this particular provisions. You must have forgotten it. But still, if you remember, what do you think? TTA is applicable to resident or it is for non-resident also?
Resident only.
TTA is for everybody. TTB is only for resident. TTB, and when we say resident, see, in any provision, when we say resident, they both are resident, right? This person is a non-resident. So whenever we say, and if anything is applicable to resident, whether you are ordinary resident, whether you are not ordinary resident, the common thing is that you are resident. So for resident, these two will cover. But TTA, guys, TTA is applicable to all the people, all the individual, whether they are resident or non-resident, does not matter. So TTA is available here also, and here also. Got it? So this is what the benefit of practicing is, that you get to know the provisions. You can keep revising those provisions also side by side. So TTA is applicable for Santosh, correct. Lakshmi, correct, for everybody. Okay. But we will be doing 80 TTA after calculating the GTI. So how much is the 80 TTA maximum deduction is? The interest on saving account or rupees 10,000, whichever is lower. So here the interest is 12,000 or 10,000, whichever is lower. 10,000 will give the deduction. Here also, here also, here also. Once we compute the GTI, then we'll be giving the deduction. Interest from business in Russia, controlled in Russia. Okay, this is a Russian income, not even received in India, not arising in India.
Resident.
Only ordinary resident will pay tax 20,000. So this is a Russia income. $20,000 here. Here will not pay tax. Now, dividend from Reliance Petroleum Limited, an Indian company. Dividend, Indian company dividend. Everybody will pay tax arising in India.
Taxable for all.
Correct. This is dividend from Reliance. I believe it was 5,000. Everybody will pay. Agriculture income from land in Rajasthan, 15,000. Agriculture income from Rajasthan, Indian income.
Exempt.
Exempt.
So this is agriculture income from India. It is exempt. So I'm not doing it, but you can calculate. This would be GTI. So please calculate the GTI. And then after this, give deduction under chapter 6A, 80 TTA. What is the amount of 80 TTA? Interest on saving account or 10,000, whichever is lower. So interest is 12,000 or 10,000. So 10,000 will get the deductions also. And everybody will get the deduction. Had it been TTB, only these two people will get it. This person will not get it. Right. So because we understand TTB is a beneficial section, more beneficial section that is given only to a senior citizen who are resident. So 10,000, 10,000, 10,000 for everybody. And then you will get your total income. calculations, guys, you can do. Correct? So let us keep it till here today, and we'll continue now tomorrow. Any doubt, please tell me, and otherwise we can drop. Thank you so much, guys. We see you tomorrow.
Thank you, sir.
Thank you, sir.
Bye bye. Take care.
Thank you, sir.
Bye bye bye.
Thanks.